Okay, let's go to unit number 5. Will be on example 3, whereby they were telling us the situation where a depreciation will be capitalized, which is like a depreciation will be used to calculate, or it will form part of the cost of another asset. Paragraph 5.6.5, accounting treatment. It can be on page 87 of the study guide or page 50 as per Acrobat pages. I don't know which one we are using. So we are here. In terms of Acrobat, it will be page 15 of 28. In terms of the page number of the book, it will be on page 87. So we are on this paragraph 5.6.5, accounting treatment. So they say the depreciation charge for each period shall be recognized in profit or loss unless it is included in the carrying amount of another asset. So we all know that in most cases, the depreciation will be recognized as an expense. But if in the case where they tell you that the depreciation of this asset was capitalized to another cost of another asset, so it means now that portion of that depreciation, you have to capitalize it towards another asset. So it means that depreciation will form a part of the carrying amount. So the depreciation charge of each period shall be recognized in profit or loss unless it's including the carrying amount of another asset. The depreciation charge for a period is usually recognized in profit or loss. However, sometimes the future economic benefits embodied in an asset are absorbed in producing other assets. In this case, the depreciation charge constitutes part of the cost of the other assets, and it is included in the carrying amount, depreciation capitalized. The following serve as an example of what will happen if depreciation were capitalized to another cost of another asset at initial recognition. Okay, example 3, capitalization of depreciation. X Limited withdrew a crane from a crane A from a normal construction operation for the period 1 October 93 to 31 December 93 and used it in the construction of a new plant, which was commissioned on 1 January 94. X Limited financial year end is 28 February, and crane A cost 200,000. Crane A at carrying amount on 1 March 93, it was 100,000. Depreciation. Cranes are depreciating at 20% on the reduced imbalance method, while plants are depreciated at 2% fixed installment method. Cost price of a new plant is 550 before capitalization of depreciation. So now the required, I think they will say, show the journal entry, the profit before tax note, and the property, plant, and equipment note in the financial records of X Limited for the year ended February 94. So before we're gonna do those things, first we have to calculate our depreciation. So we are dealing with example 3. Okay. So first we're gonna calculate depreciation. So the depreciation, we're gonna have a depreciation for crane. And then we're gonna have a depreciation for plant. So our financial year is when?
On October 93.
Okay, no, the financial year is start on which day? Let's start with the starting date. The starting will be 1 March 93, right?
1993.
To 28 February 1994, ne?
Yes.
Okay. Then let's do based on the information they were saying this crane which was withdrawn, blah 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 blah. The cost of the crane was 200,000. The crane A carrying amount on 1 March. So now the carrying amount of a crane, so it means crane will say it have cost, it have ACC, and then it will be a carrying amount. Okay, let me just say carrying amount. So based on the information given, the cost is how much? 200,000, eh? And the accumulated depreciation given is 100,000, which was accumulated depreciation on 1 March 93. So the carrying amount means it's gonna be 100,000. We all happy. We are all happy, right? So they say depreciate at 20% on reduced imbalance method. So the depreciation, the total depreciation for the crane, total depreciation for crane for the year ending February 20, you know, we used to the 20s, sorry, 1994. It will be, I guess they said it's calculated on the reduced imbalance method. So it means we will say it will be 200,000 minus 100,000, then we are left with 100,000. Then 100,000 that is left, multiply by
times 20%,
right? And it's for the whole year, I get
it.
Which it will be how much?
It will be 20,000.
It will be 20,000. Then this will be the total depreciation for this asset as at 28 February 1994. Now, okay, we said let's put 20,000 here. Now they say there must be depreciation capitalized. Then we have to say depreciation capitalized or capitalized depreciation. Capitalized depreciation. We don't know it yet. So let's calculate the capitalized depreciation. I will put it here. Okay. You can see my red writing. I must not. Can you see it? Hello.
Yes, we do see it.
All right. So they say they withdrew the crane from 1 March 93 to 31 December. So financially, we said it start on 1/03/1993, and then is 2 ending on 28/02/1994. So the crane was removed somewhere in the middle, right? So it was removed somewhere, let's say on 1 October.
To December 31.
So 1 October 93 to December, né?
Yes, December 31.
Now, from 1 October 93 to 31 December 93 is how many months?
It's 3 months.
It's 3 months, ne?
Mm.
So it means out of the total depreciation that we had at 20,000, the 3 months of it must go towards the plant, must be capitalized towards the plant. So we will say the 20,000 divided by 12, which is for the whole year, right? Multiply
Yes.
by 3 for that 3 months, which is this period. This one. So it gives me how much?
Let's give you 5,000.
Then it's 5,000.
Mm.
Okay. Then it means the 5,000 must be the depreciation capitalized here. We're all happy. We are all fine. We are all being on the same page. I'm gonna call Nonkosi. She says she's okay. Lesero, you're fine. Non-Tete, she's okay. Priscilla, Ntabiseng, Tulani, Esi, Mwalengwe.
Yes, we're fine, sir.
Okay. Then it means the 5,000 is the depreciation that need to be capitalized. Now let's do the plant. The cost of the plant given is how much?
It's 550.
The cost of plant given is 550.
Yes.
Okay.
Yes, it's 550.
Now we're gonna add depreciation capitalized. Which is how much?
Which is 5,000.
Then it's 5,000. Therefore, our total cost for plant now it will be 555.
Yeah.
We're all happy.
Yes.
Okay, because here I don't want anyone to fall behind. That's why I will keep on checking. I don't want anyone to fall behind because there is no way that you're gonna write this FAC without this exercise of depreciation and capitalization. There is no way. So now we agree that the total cost of the plant is now 555,000. Now we can calculate depreciation of this plant. So we'll say the plant, let's read from the study guide now. They said the plant it costed 550 before the capitalization, and then the plant was ready for use on when? The plant was commissioned on 1 January 94. So it's the day that the plant was started to be used. So the plant was used from 1/01/94 to 28/02/94, which is 2 months, né? Then we will say the 555 as a depreciation, 555,000 multiplied by, they say depreciate by 2%, right? Which is on the straight line. 2%, then multiply by, it's used for 2 months. 2 divided by 12. Then what is the value? Calculate for me, please.
It's 1,850.
All right. Then this will be the total depreciation for the plant. While on this side, we have a total depreciation for a crane. Now we can start doing the journals as they wanted the journals. So the journal entry, it will be depreciation on the debit side. We have this one, the 20,000. Then accumulated depreciation will be 20,000. And then we will have the plant. So this one, it will be the one which was capitalized. So remember, this increases the cost of plant. So in the journal, on the debit side, you will put plant because the plant is increasing, right? And it increased by what? By depreciation capitalized. Therefore, it increased by how much? We calculated is 5,000. Then we do the depreciation journal for plant itself. So it will be depreciation on the debit side. And then accumulated depreciation, which it will be for the plant. So this accumulated depreciation for crane. And then this one will be accumulated depreciation plant. Then here it will be 1850. So the depreciation to be written off in the statement of profit and loss, the normal one, it will be the mixture of this. All these things, we're gonna use them. So the depreciation to be written off in the income statement, it will be depreciation. And then, sorry, we're gonna say income, because the income will be in the reduction, because we'll be reducing the profit. Depreciation. So which it will be in the form of the 20,000 that we have in the beginning. We less this 5,000 because the 5,000 was capitalized. We less the 5,000 which was increased the cost, and then we add the 1850. So this and this, their depreciation. The 5,000 is the one which is gone. So they will give us 16,850. Therefore, our 16,850. So it's like 20,000. Then this one should be minus. Then this one should be plus. Then which it will be 16,850. It's gonna reduce our income, and then which it increases it will also be a reduction on our depreciation in the future purposes. Up to so far, any question? Walengwe,
I'm so fine, sir.
non-tete, Nkosi, Lesego, Priscilla, non-tete is fine.
I'm also fine.
Priscilla,
Okay,
Ntavisen,
we're okay, sir.
Priscilla is fine. Ntavisen, Tulani, And AC?
I'm still fine on my side.
Tulani, confirmation from you? Maybe Tulani is recording away from his PC. Okay, now we're gonna do the PPE note. So what was the cost of the crane?
It was 20,000. It was 200,000.
200,000.
Mm.
The accumulated depreciation at the given.
We were given a carrying value.
Yeah,
It was hundreds.
so here we know it's minus, right? So did we have any cost of plant at the beginning of the year? Malengwe, Lontete, Charelo. Charelo, you just join us. Maybe you are not familiar where we are. We are on learning unit number 5. We are on, what is this page? Example 5, which is found on page 87 versus page 15. Page 15 is from Acrobat. Page 87 is from the normal book.
Can I try, say?
Yeah. Did we
we-
have any plan at the beginning of the year?
No, we didn't have it because
have it.
it statement city the cost of a new plant was 500 before it's capitalized. So it means we were not giving anything from the beginning. We just told about the new one.
All right. Do you agree with her? Rudani, Tabiseng, Runtete says she agree. But it's fine, it's correct. She's right. We didn't have the thing at the beginning of the year. So it means our total will still stay 100. 200 minus 100. Then we go to the movement happened during the year. So whatever happened during the year, we should have additions. We should have a depreciation. We should have disposal if there is any, which is always at carrying amount. We should have replacement. Then we must have the carrying amount at the end. cost, ACC, dip. Yeah. Now, let's calculate the additions. The additions that we have is we added this, the new plant. You remember it, right? This new plant, it must come as an addition. So we're going to say our addition, we put a new plant of how much?
Of 555,000.
Now, we didn't have addition for crane. Then the total here will be 555. Then depreciation. Depreciation for the year in terms of a crane is how much? Depreciation for the year.
I think it's 15,000.
How much?
I think it's 15.
So you say it's 15,000 after you deducted the capitalization.
Yes, I said 20,000 minus 5.
Oh. So to show it's fine. You are right when you say it's 15,000, but recognize it as a 20,000 because the asset it was used for the whole year. Ne? It was not stopped being used. Even though it was withdrawn and then used in the another part, they were still using it. So the asset was used for the whole year. So its depreciation instead it will be 20,000. Ne? You are happy with that?
Yes, I do get you.
Okay. So here it will be 20,000. And then the one for plant, it will be the 1850. So it's either way. You can say, because if we say it like it's 20,000, then here it means our depreciation capitalized, we're gonna minus it. Because at the end, this should be, it will be in the form of like this. Because you have, if you can put this, if figure is positive, it will be positive here. And the depreciation capitalized, you say minus 5,000 here. Like you say 5,000 is capitalized, here is 0. And then here it will be 5,000. And then here it will be 21,850 kind of. And then here you will say the 5,000 need to be subtracted. So your totals here instead, it will be 21,850 minus 5,000. Which will have the total of 16,850. The 16,850 will be your depreciation. But if you don't want the issues, you can just say, put the 15,000 here. It's like Mwalengwe said. You put 15,000 here. It means like you're gonna say this plus this is 20,000. Here we have 1850, and then here you have your 2150. So this will be all in the minuses. So this will be 16,850. So are we still fine up to so far? This is this value. We are still fine.
Yes, sir.
Okay. Then we can proceed. So we'll say the cost of the plant is not going to change. It will remain 200,000. The accumulated depreciation now is going to go up. It's going to be this plus this plus this, which is 120. The cost of the new plant, it will be this 555. Its accumulated depreciation will be this 1850. Then we say the 200 plus 5, 555. We have 755. Then here we say 120 plus 1850. We have 121, 850. So we're all happy. Yes, Lesego, Ruzani, Charelo, Esi, Tulane, Ntabiseng, Non-Tete. So it means everyone is fine with this exercise. No one had issues. If you have question, please raise it before we proceed to the new section of revaluations. Going once, going twice. Okay, done. Revaluations. In terms of the alternative accounting treatment provided in I-16, PPE may be revalued. So sometimes they can say you have a PPE item, but this PPE item needs to be revalued. The revaluation of PPP is widely used in practice due to the limitation of the historical cost basis to present a true and a fair reflection of the results and position of the entity. PPE that has a long useful life will be significantly undervalued if only the historical cost basis is used. After recognition of an asset, a PPE item whose fair value can be measured reliably shall be carried at the revalued amount. Its fair value at the date of the revaluation less any subsequent accumulated depreciation and subsequent accumulated impairment losses. Impairment loss are dealt in data studies. Revaluation shall be made with sufficient regulatory to ensure that the carry amount does not differ materially from that which will be determined using the fair value at the end of the reporting. The fair value of land building is usually determined from the market-based evidence by appraisal that is normally undertaken by professional qualified valuers, valuators. The fair value of a plant and equipment is usually the market value determined by appraisal. If there's no market-based evidence of fair value because of the specialized nature of the PP item, the item is rarely sold. An entity may need to estimate fair value using an income or depreciation replacement cost approach. Fair value. The revalued amount of a property is usually at the market value and is usually obtained from the independent valuators. Non-depreciable assets. It is the purpose of this module. Only the NRV will be used for revaluations. The revaluation surplus, paragraph 5.7.4. If an asset carrying amount is increased as a result of a revaluation, the increase shall be recognized in other comprehensive income, accumulated in equity under the headings of revaluation surplus. However, the increase shall be recognized in profit or loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in profit or loss. If an asset carrying amount is decreased as a result of a revaluation, the decrease shall be recognized in profit or loss. However, the decrease shall be recognized in other comprehensive income to the extent of any credit balance existing in the revaluation surplus in respect of that asset. The decrease recognized in other comprehensive income reduces the amount of accumulated in equity under the heading of revaluation surplus. The revaluation surplus is unrealized and should be disclosed as part of equity. It should be considered at non-distributable reserve. The reserve should only be used for subsequent write-down of revaluation, or it may be used for capitalization share issue. The revaluation surplus is including equity in respect of a PPE item may be transferred directly into the retained earnings when the asset is still recognized. This may involve the transferring of the whole of the surplus when the asset is retired or disposed of. However, some of the surplus may be transferred as the asset is used by an entity. In such case, the amount of the surplus transferred will be difference between depreciated based on the revalued carrying amount of the asset and the depreciation based on the asset's original cost. Transfer from the revaluation surplus to retained earnings are not made through profit or loss. In other words, not through the statement of profit and loss and other comprehensive income, but directly on the face value of the statement of change in equity. The revaluation surplus is disclosed in the statement of change in equity and indicates 1. The change of the period, surplus credited on revaluation during the current period and realization due to disposal or through the gradual use of the valid assets. 2. Any restriction on the distribution of the balance of the revaluation surplus to shareholders. Derecognition. The carrying amount of a PPE item shall be recognized on disposal or recognized on when no future economic benefits are expected from its use or disposal. So if the asset we are using and then we see that it's no longer giving us a value, then we have to recognize it. We can recognize it by means of selling it, or we can recognize it by means of we see that there is no other benefits that we can realize from it. The disposal of a PPE item may occur in a variety of ways, e.g. by sale, by entry into a finance lease, or by donation. If under the recognition principle, an entity recognizes in the carry amount of a PPE item the cost of the replacement of part of the item, then it recognizes the carrying amount of the replaced part regardless of whether the replaced part had been depreciated separately. It is not practicable for an entity to determine the carrying amount of the replaced part. It may use the cost of replacement as an indication of what the cost of replacement part was at the time it was acquired or constructed. The gain or loss arising from the recognition of a PPE item shall be determined as the difference between the net disposal proceeds, if any, and the carry amount of the item. The consideration receivable on disposal of a PPE item is recognized initially at its fair value. Then we're going to work through example 8. An entity, okay, let's hear what they want. Calculate the profit or loss with the recognition of the two assets to be shown in the statement of profit and loss and other comprehensive income and any other relevant items. We've got a machine 1 or an entity entered into a following two transactions in respect of the PPE item during the year 31 December 2012. Machine 1 with a carrying amount with the original cost of 300,000 on 1 January 2010 and the residual value of nil and a carrying amount of 180 on 1 January 2012 was sold on 30 June 2012 for 120,000. Machine 2 with a cost price of 500,000 on 1 January 2009, a residual value of nil and a carry amount of 200,000 on 1 January 2012 was withdrawn from use on 30 April 2012 after the health inspector prohibited the further use of the asset due to irreparable pollution problems. The asset cannot be adjusted to secure further use thereof, which may make it resale impossible. Both machines are depreciated at 20% per annum on the straight line method. Okay, now we're gonna calculate the example. So these guys, they removed some of the exercises, especially for revaluation, because you remember we were on example 5, right? For depreciation. So there is no way we can move from example 5 to example 8. So there are 2 examples which they've been removed, which those one, if I remember, they were dealing with revaluation. So I don't know. I think from your side, they will give you revaluation straight, unlike calculating it. Because in the prior years, you used to calculate the revaluation, especially the net replacement amount. But it's fine. Let's focus on the example 8 given. So we are calculating the profit or loss as a result of the recognition. Example 8. So machine 1. Machine 1. What was let's calculate its depreciation or the carrying amount first. We are given the carry amount on 1 January is 180, ne? You are no longer responding. Why?
Yes, sir.
Yes, sir. Yes, sir.
Hella, sometimes if I'm asking and you don't respond, I will end up seeing maybe I'm having a problem with my network or my mic is not working. So at least if you respond, it's giving me an idea that we are still in the communication. Our communication is still running well. So I will also prefer you to respond. The carrying amount on 1 January 2012. This thing was sold on June. So the carrying amount on 1 January 2012, it was given as 180. So we have to calculate depreciation that happened during the year. The depreciation during the year it will be calculated as, because they said there's the depreciation on a straight line, ne? So we're gonna say the cost. The cost it was 300,000 again.
Yes, it was 200,000.
So the 300,000 we're gonna multiply by 20%.
And divided by 6 months.
And then for that year, depreciation only 6 months.
6 months.
For 6 months.
Then which is
30,000.
how much?
30,000.
30,000.
30,000. Sharp. So the 30,000, we're gonna subtract it. So it means the carrying amount on that day of sale, CA on 36/2012, it was how much? 150, ne?
Yes, it's 150.
It's 150. Now, proceed on sale of an asset. The asset was sold for how much?
It was sold for 210.
Yes. Then we less the carrying amount on the date of sale. Less CA on date of sale. The CA on date of sale is how much?
It's 150.
So did we make a profit or loss?
We made a profit, I think,
We made a profit.
of 60. Of 60.
Anyone who have a question with explanation 1? Question with machine 1? None. We go to machine 2. Machine 2 can use the same calculation of the carrying amount. So calculation of carrying amount. CA on 1 January 2012. The machine on 1 January 2012, it was carrying amount was how much? Did they give us? I don't think so. They give us is 200,000.
No, they give us 200,000 for carrying amount on January 2012.
Yeah, is the one. Then depreciation during the year. We know we're gonna calculate it. Let's calculate it. So they say depreciate at 20% straight line, eh?
Yes.
And its cost was 500,000.
Yes, the cost price on January 2009 was 500,000. And on June 30, the machine was withdrawn.
So the machine was withdrawn not on June. Was withdrawn when? On 30 April.
No, sorry. I mean April.
Yeah, was withdrawn 30 April. So from 1 January to 30 April is 4 months, ne? So let's calculate 500,000 times 20% times 4 over 12.
I got 3,333,3. I don't know whether anyone got the same answer.
Okay, let me calculate.
Yes, we got it 33,323.3 cents.
So it's 33,000.
333.
Yeah.
33. Just 5 threes. And then the comma.
Yeah, it's okay. The one. Then the carrying amount. $30 04 2012. It was do you get this value?
Yeah. Yeah, I got the same 16. 166. 666.
You know,
I don't know how to say this money, but yeah.
Yeah, now it's 166,667. Sorry for that. So we get 166,667. So now let's then calculation of the profit. Calculation profit. Did we sell the machine?
No, we didn't. We didn't sell the machine.
Okay, what did we do?
The machine had some problems.
And then what did we do?
And then we had to remove it because of the health inspector didn't want us to use it anymore. So we have to remove it.
Yeah, so it means the proceeds on sale of asset is nil. We didn't sell this machine. It was removed. We all happy, ne?
Yes.
Yeah.
So the proceed is nil because of its removal. So it will be proceed on withdrawal of machine, not on sale. So the carry amount, we got 166,667. Then, did you realize any profit? No, it will be a loss. A loss on withdrawal machine, which it will be that minus 1667. Any question?
Not so far, sir.
Okay. So suppose we are doing the income statement. This will be regarded as other income. This will be an expense. Okay.
Which one?
This
Machine two an expense.
This one
And
will
then-
be a profit. This one will be expense. So this one will go to other income. This one will go to other expenses. Remember, I said when we are doing our, what do we call, the statement of profit and loss, we have that abbreviation. You remember my abbreviation? So gross profit, you still remember, right? Or wait. You forgot already. Nah, I don't teach people which they forget. You forgot. Guys, you forgot until
I mean,
2 weeks
I'm
ago.
not so sure, man.
You
I'm not
forgot
so
things.
sure, maybe.
You forgot things that happened 2 weeks ago. Distribution. So, based on the information that was shared before, which people they forgot, for what reason, nobody knows, but they will be writing exams soon in October or early November. I don't know. Based on the information that was on learning number 3, if you still remember, on learning number 3, we were dealt with example 5, whereby we were asked to draft the statement of profit and loss and other income. And I said, UNISA will say you must draft this according to by function, not by nature. And if you are drafting it using by function, then this is how it's gonna look like. And then people now they forgot. Do you still remember this part? Or is it a new thing now? Hello?
Yes, we do.
Okay.
Remember.
So this doesn't go with that abbreviation which I said. the G, the O, the D, and the A. Because my abbreviation, I mentioned that GODA. So on your, according to what you calculated, the profit from machine A, it will fall here. Here, we'll put the profit for machine A. And then the loss for machine 2, it will fall here. Am I clear? They can give the same information then,
Yes.
and then they say draft the exact, like with the same information, present the statement of profit and loss for the year ended 31 December 2022. Which they give you only those 2 transactions, and the others they gave you revenue straight, cost of sales straight, gross profit straight, other income they put XXX, and then distribution cost they give you straight, admin they give you straight, other expenses they give you XXX, finance cost they give you straight, and then they say calculate profit before tax. The marks may be 6 marks, only knowing that you are 3 marks here on the machine A, they will get 3 marks, and then on machine 2 you also get another 3 marks. So the other things maybe it will be half. So in total they say present that thing they give you, they say it's 10 marks, but knowing that the most 6 marks is from your calculations. You get me?
Yes.
All right. So this is how this module interact. You can see something, you find that it's not, you thought it's not gonna affect the others, only to find it's gonna affect. So here to be your other expenses is where you're gonna put your 1667 here. And then here you're gonna put your thing, it's how much? Commission 1, profit 150, 60,000. Sorry, I did something. This was supposed to be no field. The 60,000 is the one which is profit. So your 60,000 will sit here. Is the information clear? This is an extract of your statement of profit and loss. Suppose they ask you now, they give you those transactions. This is what you were supposed to do. You find out maybe this is 3 marks, this is also 3 marks, but the whole thing here, they say draft the statement of profit and loss for the year and whatever is 10 marks. Only knowing that these things, they will mark them in halves. Only this will have 3 marks and this one also have 3 marks. Am I clear? Can we proceed?
Yes.
All right. Then let's proceed further. Disclosure requirements. Requirements of the cost of revaluation and modulus. The annual financial statement shall be disclosed for each class of PPE. The measurement basis used determine the gross carrying amount. The depreciation method used for each class of PPE. The useful life of the depreciation rates. The information regarding the revaluation. A reconciliation of the carrying amount at the beginning and the end of the period, showing the additions, the increases resulted from revaluation, depreciation, and other charges. Further disclosure will require the annual financial statement shall disclose the existence and amount of the restriction of the title, the PPE pledged for security, the amount of expenditure recognizing the carrying amount of PPE item in the cost of production, the amount of contractual commitment of the acquisition of PPE. Yeah, those you can just read on your own, because sometimes this reading, they take time and then we end up not covering things. So we've got the example, comprehensive example 9, and also have example 10. So I'm gonna do example 9. So you'll do 10 on your own. And then where you don't understand, you will tell me. We're gonna do this. Example 9. We are given any information pertaining to Mr. A Pty Limited, which he have a computer equipment at carrying amount of 12,000, vehicle at carrying amount of 65, accumulated depreciation 82, financial equipment carrying amount 84, carrying amount depreciation 14, and then machinery and the plant carrying amount 300,000, land and building is 100,000, land is 100, building we don't know. Additional information during the year, these are the depreciation applicable. Computer equipment 33.3, 331/3 straight line, vehicles 25% reducing, financial equipment 15 reducing, machinery 20% straight, building 2% straight. Computer equipment was purchased on 28 February 97. They didn't give us the cost, so we have to work it out. Machinery has already been depreciated for 2 years. During the year, the plant and the machinery were used for 3 months to build a new plant. Plant was commissioned on 1 January 1999. The full expenses were incurred in the building the plant and were posted to the various accounts. Labor, material. The land and building cost of the factory building at office in Trading Park F now 101. Land and building are owner occupied. The building was completed on 28 February 1999 for 1 million. Financial equipment with a cost price of 10,000 and accumulated depreciation of 6,000 at 28 February was sold for 3,000 at 31 December 98, and the total amount received was taken to the financial and equipment sales account. No other transaction on non-current assets happened. Required: disclose the non-current assets and depreciation in the annual financial statement. So it seems like they want your PPE kind of in the balance sheet plus the notes. So let's do it. So it means we are required to present the statement of financial position plus the notes, but with the information given. So we've got example 9. Do you get distracted by the children playing?
No.
Okay, it's fine. So it means my headset they are working properly with the noise suppression. So let's continue. Because from my side, I can hear children playing and it's so noisy. So let's continue. We have example 9. Then we're gonna present the information for A Limited or APTY Limited. So we have statement of financial position. Yeah, and that's 28 February 1999. So we're gonna have asset, which will be non-current assets. Which will be the property, plant, and equipment. Fine. Then we have the notes. So normally the accounting policy is not required in most cases. Don't bother about it. Then we've got one mostly to be the accounting policy. Suppose they want it, it's just a free marks in G. You just mention according to the depreciate the asset that according to blah 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 blah. It's just a statement. Now, mostly we're gonna do the calculations, or we can just see how many assets do we have for this PPE. I see building, machinery, furniture, vehicle, computer equipment. So plus land, because land is given somewhere somehow. So there will be 1, 2, 3, 4, 5. I should just be 6. Yeah, there are 6 assets. So we're gonna have, let's write them down. Land. what's given?
Land. We have buildings. We have computer and equipment.
Vehicles,
Computer.
machinery,
And we have vehicles. Then we have furniture.
furniture,
Furniture.
And we have machinery.
Yeah.
Okay. Then, as usual, CA at the beginning. Cost, accumulated depreciation, the movement happening during the year, which will come as a result of addition, depreciation, capitalized, proceeds on sale,
Disposal.
disposal at carrying amount, what else? Revaluation, if there any. Replacement. Yeah, I think they're done. Now let's see the calculations. Or let's add whatever is needed. Whatever we see, we can put it. We are given the carry amount on 1 March 98 for what? For computer, ne? Computer on 1 March, we are given the carry amount is how much? Remember, in this case, you have to draft this and then you start plugging the amount wherever you see, and then from there, whatever you don't have, you work it out. So the carry amount of a computer is given on 1 March 98 is 12.
It's 12,000,
yes.
Okay. What
and
else
we're
was
also
given?
given the vehicle carrying amount of 65.
The vehicle carry amount is 65.
And accumulated of 32.
And accumulated of 32.
And the furniture.
Carrying amount furniture.
It's 34. And a depreciation of 14. And a carrying amount of machinery and plant, that is 300. And also the land, that is
so 300.
100.
Machinery carry amount is 300. And then we are given land and building, whereby they say land is 100.
100.
Sorry. So we know it is also a cost because it doesn't depreciate. So this is how you answer this, because these people, they will give you information, you have to work it out. Sometimes they can give you the carry amount at the beginning is as 12,000, and they also give you a carry amount at the end, and then they give you the the depreciation for the year. Like, you just have to plug according to the way you see it. Then whatever balances that you don't have is the one which you're gonna work them out. Are we clear?
Yes, sir.
Yes, sir.
Yes, sir.
Then let's work whatever is not given. So I'm gonna plug. You know, I miss tutoring like before. You see that time we were tutoring before COVID, it was so nice because we're using whiteboard and we were faster as compared to the one of using laptops. Typing is taking long. So now we can go to the use additional information. Additional information number one is fine. We will deal with it as goes by. They say computer equipment was purchased on 28th February. Okay, sharp. Number three, machinery depreciated for 2 years, has already depreciated for 2 years. So it means whatever we see here on machinery, here, whatever we see, the machinery didn't give us any other value except 300,000. So machinery and plant carry amount is 300,000. How does it depreciate? The machinery is depreciated on 20% on a straight line. Okay. And then the machinery we purchased when depreciated for 2 years. Oh. Now let's calculate the cost of machinery. Calculation cost of machinery. You are given carrying amount here. Of how much? 300,000, ne?
Yes, it's
Yes.
200,000.
The cost we don't know yet. Then it means only depreciation and another depreciation. This is based on the information they give us, because they say machinery has already been depreciated for 2 years. So this will be depreciation for year one, and depreciation for year 2, as per information given. We are happy, right? And the carrying amount must be 300,000. So it means something minus whatever here, it should be 300,000. And depreciation is 20%. Ne?
Yes.
So it means here the machine is remaining at what? Remember, the total machine should be 100%. Okay? So meaning the 100% here, 100% here minus 20% here minus another 20% here, then we will remain with what?
60%.
With 60%.
We are all clear, right?
Yes.
Then now let's see. Well, let's calculate the cost price. You will say you are 300,000 that we have. The 300, right? That we have.
Yes.
You times by 100 You divide it by 60,
60%.
which it will give you what?
500,000.
So it means your cost price is 500,000. We all happy.
Yes.
So these things, they're the one which they guided you to arrive to this 500,000. So it means now here we have 500,000. So our 500,000, you minus something, it will give you 300,000. So in this case, we can say 500,000, this is a straight line. 500,000 times 0.20 is 20%, ne?
Yes.
Yeah, 20% is giving 100,000. So it means here the machine is depreciated by 100,000 every year. We are all happy.
Yes.
If you have a question, please notify me before we even get lost further. So we can say here machinery cost is 500,000. And then we say accumulated depreciation was 200,000. Happy?
Yes.
Is there anything happened to the machinery during the year? E.g., it was sold, was it blah, blah, blah? If nothing, then let's just conclude the whole column of machinery. Computer equipment purchased, machinery depreciated, fine. During the year, the plant and machinery were used for 3 months. You see?
Yes.
So here, machinery and plant were used for 3 months. So now let's read. Were used for 3 months to do what? During the year, the plant and machinery were used for 3 months to build a new plant that was commissioned on 1 January 19, whatever. The following expenses were incurred towards the plant, towards in building the plant. Okay. Now let's continue further. We set a depreciation per year for this machinery. Remember here they say machinery and plant, but now we are only focusing on the machinery itself, ne? Without plant. Ne? Are we happy?
Yes.
Okay. The machinery itself, it depreciates by 100,000
500,000.
per year. We are happy. Now they say the same machinery, it was used in the production of a new plant for 3 months. Is that thing of depreciation capitalization? So it means we will say the 100,000 divided
Times
by
3 months.
yeah, then times 3 months. Is it 3 months? Yes, 3 months.
Yes, it's 3 months.
Which is how much?
25.
We still happy, all of us, ne? So this will be depreciation capitalization.
Now on that calculation for the 100,000, don't we do
Okay.
it the other way around to say 3 months divided by the 12 months?
Hmm?
The one you highlighted in green.
Mm-hmm.
100,000
Mm-hmm.
divided by
Mm-hmm.
12 times 3. Oh,
Mhm.
okay. I usually do it the other way. 100 times 12 divided by 3. Okay. It's the same
Okay.
thing. Thanks.
All right. Depreciation capitalized towards plant. We still fine, ne? No one must get lost here.
Okay.
okay meaning you don't want to get lost, or okay meaning you are fine?
I don't want to get lost.
Okay, all right. So it means you must concentrate perfectly so that you don't get lost. So far, you're still on track. Sharp. Now, they say a new plant, to build a new plant. The plant was commissioned on this date, and the following expenses were incurred in the building the plant. So, cost incurred to build the plant. We have labor, and then we have what? Material. So our labor is 55,000. Our material is 130,000. Then when we add the two up to so far, they give you one is 185, isn't it? Calculate on your side while I'm doing my.
Yes, it's 185.
So you get 185. Now you're gonna add depreciation capitalized, which is how much?
Just 25.
25,000.
Then add it with 185.
It's
210.
110.
So it means, okay, someone want to ask something?
Isn't it 195,000?
How do you arrive to 195? Kemang,
Yeah.
how do you arrive to 195?
65,000 plus 130.
Which 65,000?
Oh, is it 55?
Yes.
Yeah, it's 55,000 plus 130 is
Oh.
185.
Okay, so that's sorry about that.
All right, no problem. So we are now at 210. We all happy up to 210, eh?
Yes.
Yeah.
So the 210 we can say is
The addition
towards plant. Happy? Oh. So this 210, we can put it as addition towards the plant. Whatever information that we were saying, we're gonna put as addition here. Remember, it's gonna also it's gonna also go to this column, because here is machinery and plant. It's gonna go here as addition of 210. We are still fine.
Yes, sir.
So now, let's calculate the depreciation during the year in respect of. So, okay, we are still not yet done. Eh? Now, let's continue further. Now, as per statement, they say the plant was commissioned when?
1 January.
1999, eh?
Yeah.
And the financial year is finishing on
28 February 1999. So we have 2 months.
So now we're gonna calculate depreciation towards the plant. Depreciation for plant will be the 210 that we have. They said the plant is depreciated at 20%, I guess, on a straight line.
Yes.
Times 20%. Then we said it's gonna be 2 months, né?
Yes.
Yes.
Which it give me how much?
7,000.
Can I give you 7,000?
7,000.
Mm.
So now our depreciation for the plant and machinery will be how much? The total depreciation.
I think so we'll have to take 75,000 plus the new one that we calculated right now, that is 7.
So we have to say 75,000 plus
Plus the 7,000 is going to be 82. I don't know, I think so.
you don't know. Don't copy don't copy the solution while you don't understand. It's fine, it's 82,000, but how did you arrive to this 82,000? Let's go back. It's not a train smash here. You have a depreciation for the year, nah? It's 100,000. You remember it?
Yes.
This one, the machine per year, it depreciates by 100,000. It's the depreciation. So let me just wrap this and say depreciation per year is 100,000. Why bonnet? Then you will less
Yes.
you less the one you capitalized, which is
Which is
25,000.
25. Then we got 75.
Then you got 75, né?
Yes.
So you get a 75 somewhere here.
And then we add with
Then you add with the
the
7,000.
and
Then you get
then
82.
the 2.
We are all happy.
Yes.
So this 82,000, we can peacefully say we take it and we record it here as our depreciation for the year in respect of the plant here. Anyone who doesn't understand, please notify me. You can talk because I'm not watching the screen for the teams. So I won't see if you raise a hand. Anyone have a question up to so far?
Sir,
Mm-hmm.
the 25,000 for depreciation capitalized. Are we going to subtract it, or are we going to put it in the brackets, or we're just gonna leave it? We're not going
Are we
to
gonna put it? Are we gonna put it in the brackets where?
in the capitalized depreciation? Because right now we subtracted it already almost.
Yeah, we're gonna here on this thingy, on this line, we're gonna put it in the brackets. That's 25,000. We're gonna say
But isn't it gonna be subtracted twice if you want to subtract it there, and then we already subtracted it here, depreciation for the year.
so. You say if we say 200,000, ne? Let's say towards the accumulated depreciation at the end. Accumulated depreciation at the end, it will be 200,000. This one plus the 82. I get it.
Okay.
Plus the 25. Then it will be the balance at the end. Remember, 82 it's like up because of the 7,000 If it was not that 7,000, here we're gonna put 7. It was gonna be 75. Remember. So the 75. So remember the 75 here. I'm just make you to understand. Plus the 25 here, they will be both in the brackets. They will be both in the minuses. So at the end here, we're gonna have the 100,000. So that 100,000 we added with that accumulated at the beginning. Now it's gonna sit with accumulated depreciation of 300,000.
Okay.
We're happy.
Okay.
That's why you see that 300,000 that was supposed to have it, ne? Then you add with that 7,000, the one came as a new addition, depreciation. You're gonna have 307. That you see in the solution, you have 307 at the end.
Yes.
So is it clear? There's no minus twice here.
Oh, okay. Okay.
Is it
Thank
clear?
you, sir. Yeah.
No, don't satisfy me. You must be satisfied first. Are you clear? Happy?
Yes, I am clear because I was when you're calculating it, it makes sense because now I was going to put it the
So
depreciation for the year I was going to put 1,100 what again?
so when are you gonna put 100,000 more?
I was going to put it as plus.
Oh,
Yes, and then
we
on the
just
capital line I want to put the 25,000 as plus.
we just put the minuses. As long as we can have an understanding, more you don't put the full 100,000. Instead, you are supposed to be 75. But because when I lay depreciation, you have the new machine or the new plant, then now you have to add it back. So here I know why you get confused.
For capitalized, it's always a minus.
Yes, I know the reason you get confused because it's like we capitalize to the same asset, kind of. Unlike you remember the one we did this one we did got confused because we were capitalizing from crane to plant.
Yes.
But that one is like we are capitalizing from crane to crane again. Because
That's how I was feeling.
Yes, it's like we are capitalizing from crane to crane. It's like we have crane 1 and crane 2. Now we are capitalizing from crane 1 to crane 2. But when we group them all together, we're gonna say it's crane. We don't say separate between crane 1 and crane 2.
Okay, so thanks.
Anyone who have a question? We are happy, ne? So now it means we can conclude this column, all of it, once and for all. Because it seems like everything now we have it. So here, the cost now is gonna change because it was sitting as 500,000, but we added 210. Actually, you remember the 210? Where does it come from? My yellow 210.
Yes, sir.
So now we're gonna say our cost at the end of the year is 710, which is will be 500 plus 210. This 500 plus 210, then they give us 710. We are all happy, ne?
Yes, sir.
And then our accumulated depreciation, it will be the 200,000 minus, then you add it with 82,000 minus, then you add with 25,000 minus, then they will give you a new minus, which it will be minus 307. So let's calculate them. 200,000 plus 82 plus 25. It gives me 120. I had something wrong here.
Yeah. It's give you 307.
Yeah. So we get 307. So we are happy to say our accumulated depreciation at the end of the year is 307. So we are happy, né? So the column for plant and machinery is done with its calculation that were happening outside. So now you can name the, okay, my addition is calculation 1. They will penalize if you don't mention these things. Or this one comes from calc 1. And then your depreciation 82,000 is also from calculation 1. This one is also from calc 1. But sometimes if let's say the amount here is now wrong, but you tell us this calculation 1, Now we're no longer gonna mark here. We're gonna mark from the calculation to see where did you get wrong. Suppose, let's say, this capitalization of depreciation in terms of memorandum, it costs 5 marks. Ne? It's 5 marks, this thing. And then when it happened that yours is not 25,000, instead maybe it's 21,000. So now we'll say, since here is wrong, we go to here, we see where did you go wrong. Then we see that, okay, maybe here you got 1 mark there, you got that 2 marks there, and then you got that 1 mark here, but you forgot to put this. You forgot to put this. It's like, let me go further. It's like, here's 1 mark, and then here's another 1 mark. Maybe here is 1 mark, and then here it was supposed to be 2 marks. Ne? Let's say here it was also 2 marks. So 2, 4, 5. So this thing, let's say all in all is even 6 marks. I just want to show you something. It's 6 marks. So if you are saying you are depreciation, capital depreciation is 82,000, and here, I'm sorry, this was, I want to put this 6 marks here. Cut, paste. Here you are supposed to get 6 marks, but where now somehow you didn't put 82,000. You also maybe it's 80,000 or it's 79,500 due to the calculations. You know, things happen. But for the fact that maybe this one you got it right, this one you got it right, this one you got it right, you only messed up here. So it means you see you can at least scoop that 4 marks. Can you see it? This one.
Yes, sir, we see.
And then you messed up only here. So, but if you suppose you didn't mention that this you did from calculation 1, you didn't tell us. When we mark, for the fact that it's wrong here and we don't know where to reference, we just put X, then it's 0. You didn't get anything. But if you put that reference, then we're gonna check on your reference what was happening. So it's important to show these things of calculations here. Ne? The same applies to when you draft your full thingy, your full presentation of the thingy, of the, what do you call, of the statement. If you tell us it's calculation 1 or note 1, it's very nice. You won't lose marks. But if you just put the amount, but you don't tell us where did you get that amount, if that amount is happened that is wrong, then you lost the whole marks, all of it. We clear, ne? Then we can proceed to other things. Let's go to the land. Land, adjustment number 2 is done. The computer equipment, ne? Is done, but not yet done because we're still gonna read something. Adjustment number 3, machinery is done. We are done with anything to the machinery. Adjustment number 4 is done, ne? We are happy with adjustment number 4, right?
Yes.
Now we go to adjustment number 5. Adjustment number 5, they say the land and the building consist of the factory and the offices in Trading Park, F number 101. The land and building are owner occupied, and the building was completed on 28 February 1999. The building was completed on 29 February 1999. The financial year is ending when? 29 February 1999. So it means the building is not going to depreciate. We are happy.
Yes.
So here we put the building is 1 million, eh?
Yes, it's 1 million.
So it doesn't depreciate because it was completed at the end of the year. Then nothing happened on it. So the carrying amount at the end, it will be still 1 million. The cost of it is 1 million.
Sir, sir, can I ask a question? Why do you have to put that 1 million on additions? Because it's already happening at the end of the year. Why can't we just put it there at the cost without putting it at the additions?
Which cost?
At the end, remember, at the end of it, on that PPE note, We're going to say the carrying amount value will be at that end of the year, which is 28 February. Also, the cost will be at the end of that year. Why are we not putting that value only at the cost but not on the additions?
Okay. Remember, here is the things happen on 31 December ne, or on 29 February. Ne, at the closing of the business. Like if we say the business is closing at 1600, when we are closing the business at 1600. But remember, that 1 million, it's not like it happened at 1600. It happened somewhere maybe in the morning. It happened maybe at 12 o'clock, 1 o'clock. We have to show that it was addition for the year. You have to show it here.
Okay, so we don't put it like it happened at the end of the day on that.
So when you are gonna say here is 0, you don't put anything here. It's dash, but you put 1 million here. According to you.
Yes, that's what I wanted to know. Why do we have to put it also on addition if it happened on that very last?
Sharp. Now we'll ask. You say you didn't have anything here. Here you are sitting at 0, 0, and 0. Now you say you have 1 million. Nangabujisa, where did this 1 million come from? Remember, let's say I'm an auditor. Now I'm as an auditor. I'm seeing that you start your financial year and you say you have a land and building as 1 million. When did you get the land? Where? Show me the title deed of that land.
No, I understand. It also means that if probably we had another building, and this one it is an addition that happened on that very date, so we have to put it on the addition as 1 million.
Suppose you were having building before. Let's say you were having a building before of 1 million, for example.
Yes.
In the beginning. Then now it happened that you have another building that you bought on the 29 February 1999 or 28 February 1999. You're gonna say, now I was having the building of 1 million in the beginning. I bought another one during the year or at the end of the year. Now my total balance at the end, when I'm presenting my statement of financial position, is now 2 million.
Yes. Okay. So it means that the last building that I purchased, I need to put it under addition, even though the date state it's the end of that financial year.
Yes, 100%.
Okay, I understand.
Any other question? Let's finish at least around, we started our class around 5 past, né? Let's finish at least around 10 past, quarter past, somewhere there. So we are happy with the building, né? Let's go to furniture. The furniture and equipment with a cost price of 10,000 and accumulated depreciation of 6,000 at 28 February 98 was sold. Was sold on 28 February 98. Our financial year is for 99, né? So this thing was sold at the beginning of the year. Sorry, it was sold for 31 December for 3,000.
During the year.
Yeah, actually it was sold during the year. So now let's calculate depreciation of the furniture and equipment. Furniture. I'm gonna be faster, ne? So its cost is how much?
It's 10.
And then it's thingy, accumulated depreciation.
It's 6.
Then here carry amount is 4,000, ne?
4,000.
So it was having this carry amount of 4,000 on 103, ne? 1998, right? And it was sold. Sorry. And it was sold on 31
December.
So we have to have depreciation of it first before we sell it.
Yes. So it's March, April, May, June, July, August. It's 10 months, isn't it? 10 months.
Also assist her with counting. Me, I'm trying to write so that when it's depreciating on purchase and balance. Okay. Calculate the months with her so that we can be on the same page. It's 10 months. You said we're gonna start from March, ne? March, April, May, June, July, August, September, October, November, December.
Yes, when I got 10 months.
Yeah, it's 10 months.
Yes, it's 10 months.
Okay. So our 4,000 is the carrying amount, right? Multiply by 15%. Because this is 15%, right? Multiply by 10 over 12. How much do we get?
I got 500.
I also got 500.
Yes,
So
500.
So it will be 3.5 again. So this 3.5, we can conclude that is the sale disposal at carrying amount. Right? So this 3.5, it will go here. The 3.5, it will go on the disposal of, we are doing what furniture, ne? It will come here. The disposal at carrying amount, it will be 3,500. We happy, ne?
Yeah.
Then now let's do the depreciation. Why?
Why are you adding the 500 rand to the disposal? Because they said the disposal is 3,000. Why are you adding the depreciation to the disposal?
Which depreciation?
I can recalculate the depreciation is 500 rand for the 10 months.
Yeah.
And then they said we sold the equipment, the furniture on the 30. I mean, on 3,000 rand, which is the disposal amount.
Yeah.
So why are we adding the depreciation amount of 500 rand?
We are not
disposal.
adding it. We are not adding it.
It didn't add, he minus.
Okay, I get what you want to say. You see the 3,000 that you see on the statement.
Yes.
That's the selling price. It's the selling price. They sold it for. That's the selling price. They say it was sold for. So it means the selling price is 3,000.
Oh, so the disposal is the depreciation for the year, and then plus
No. I will explain everything. You're gonna mislead yourself. The selling price is 3,000. Disposal at carrying amount is 3.5. This is what we calculated. We had cost of 10,000. We less accumulated depreciation of 6,000. On 1 March 98, the carrying amount of the asset was 4,000. As given, you are happy, ne?
Yes.
Then from there, we calculate depreciation for the year for that 10 months, which it was 4,000 multiplied by 15% times 10 divided by 12. It gave us 500. Ne? Then we say 4,000 carry amount at the beginning minus the 500 depreciation for the year. It gave us 3.5. We sharp, ne? Then the 3,500 is the one that we're gonna return off here on our PPE. We're gonna say disposal at carrying amount. You see, disposal at carrying amount. When I was selling this asset at carrying amount, it was within 3.5, not your 3,000 of selling price plus 500 that depreciation.
Okay, I get it now.
Then the selling price from the start, you get that 3,000. you less your disposal at carrying amount, which it will be 3,500. It means we made a loss. Loss on sale.
Okay.
Or loss on disposal. Of how much? 500. Who happy?
Yes, sir.
Okay, so don't say it was 3,000 plus 500 at depreciation.
Okay, sir.
Anyone who have a question? The question is interesting. We're not going to finish it, but it's interesting. Let's continue. So we have the 3.5 that we sold, ne? We all happy about it.
Yes, sir.
Now, let's calculate depreciation for the year in respect of the furniture. Depreciation for the year in respect of the furniture. Depreciation for the year in respect of furniture. We will say the carry amount of the furniture, it was how much? As given.
The furniture carrying amount is given was 34.
Was 34,000, ne?
Yeah.
Okay. The carrying amount as given was 34. We all happy, ne? We all happy,
Yes.
ne? Now, what is
Yes.
the carrying amount of the furniture sold? The carrying amount of the furniture sold is how much?
0.5.
It's 4,000.
Remember, we are still talking at the beginning of the year. We are not talking at the end. Of furniture sold is 4,000.
It's 4,000.
I agree with you. Anyone who disagree? So that we can explain further. So depreciation, it will be for the whole year. So it's like on the furniture remaining. Here we are calculating depreciation on the furniture remaining. Ne? So it will be depreciation of 30,000, depreciation for the year. It will be 30,000 multiplied by 5%.
45.
It's 4,500, ne?
Yes, so 4,000.
So the 4,500 you're gonna add with depreciation of the vehicles of the furniture sold.
Yes, with the sold one, which is 5. Okay.
Which is 500.
Yes, it is 5.
So your total depreciation will be 5,000.
Yes.
We still happy? Are we still happy? Tell me which color can you see?
I'm good.
So your 5,000 now will come here. Depreciation here, 5,000. Anyone who doesn't understand? Is there anyone who doesn't understand? Seems like everyone is okay. So you know this plus this will be 48, ne? It was not given to us.
Yes.
But now we say the carry amount at the end, it will be our 48. Then you less that, I mean, in terms of cost, you will say 48 minus the 10,000, the one you sold here. That 10,000, this one. Then you remain with 38 here at the end. Then you accumulate depreciation, you have the 14. Then you will say you are 14. Then you less the thingy. You less the you less your 6,000. And then you add the 5,000. I mean, you add they are 4.5, I mean. You get it? Here it will be the 14,000. You less the depreciation, accumulated depreciation of the whatever thing sold, which it was 4,000. It's 4,000. This 6,000, you less this 6,000. You remain with 8. Then you say you are 8, you add with 4.5. Because the one is sold is gone, it's no longer part of our thing. We're excluding it. So here you're going to have 12.5.